What's up, guys? Right, I'm going to show you a very simple way to trade the markets, give you a very simple strategy, again using moving averages. Now, if you haven't seen my last video about moving averages that triggers smart money traders concepts, which it did trigger a lot of people as expected, make sure you watch that, come back, watch this, or watch this, then go watch that. I don't care. Either way, both of these videos are going to be packed full of knowledge for you guys to actually learn how to trade in it. I don't want to say easy, because again, that's trading isn't easy, but you can make it easier for yourself. As I say to my students, you do not need to know how to build an engine to drive a car. And I feel like you can get deep down in a rabbit hole of why everything moves the way it moves, even though there's no real evidence into why it moves and how much moves at what time and all that stuff. It's kind of like all speculation, but it sounds sexy for marketing and breathe. But yes, that is the sad truth of it. Smart money concepts, yes, I get it, but at the end of the day, it is just a pattern strategy, okay? It's pattern recognition. That's all it is. It isn't God mode. It isn't, I know this is going to happen at this time because of blah, 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 blah. You do not know that information. You can only speculate on maybe that might be happening on that information. You do not know what's going to happen next. Otherwise, all these smart money traders would never lose. But guess what? Most of them do. So let me just show you the simple strategy that you can use as a beginner when you're starting out, and then you can start implementing it in simple ways to potentially add it into your trading plan that you've already got now, or start doing this. And as I said, the more times you spend on the charts, the more it's going to burn into your brain, the more you're going to see something, the more you can add a simple step in. Now, because there's no time limits on these prop firms, and I have made a video above, click that one up there for the best one that I've come across, which is absolutely insane. There's no rush. So you can go on the higher time frames where it's cleaner, safer, easier to do. The hardest thing it's going to be for you is actually following the process. So let's not me waffling on. Let's just get into the charts and see what the hell I'm talking about. All right, so as you can see from the charts, I'm on Aussie Swissy, and I've got two moving averages in my charts. Yes, moving averages again. I know it gets a lot of hate, but guess what? It works. So let me just get rid of this replay tool. And what you can see is basically with moving averages, when your moving averages cross over, you can take the sell or you can take the buy, no matter what. But if you're still struggling with structure, moving averages are a great way to actually show you the direction of the chart and how you could potentially add a strategy into this. Now, you can keep it very simple, but what you can do is you can say, hey, look, you can see we had a crossover, right? EMAs crossed over. And then you could say, hey, that is a potential sign for me to get into the charts. Maybe you want to say, I'm not going to enter the charts until I get a nice convincing bearish close, right? Below here, maybe breaking this sort of structure here, right? So you're using the EMAs as a crossover to define, hey, where are you going? And then you could kind of think, okay, I want some sort of like break of the previous structure, which would have been here, and maybe you can enter in on that close. And then where you're going to put your stop loss, you could put it here, or you can use something called like an ATR, an average true range, where you can kind of figure out how many pips does it move for a safe place to put your stop loss in. You can add all these indicators into the charts to build up like a strategy that you can use into potentially getting in and out of trades, right? And then maybe say, oh, how do I exit? Well, you can have a manual exit strategy where for me it's purely, a fixed strategy where for me it's either a 1 to 2, right? Because I know if I win 10, lose 10, I'm going to make 10%, right? Now, this is a daily time frame, so it's going to take a very long time. You're like, I'm not going to do that. But remember, there is no rush anymore. Prop firms, there isn't a rush at all. You can do this on a 4 hour, you can do this on a 1 hour, you do whatever you want. But if you just have a look at this, right? Let's say you entered in here. Let me just draw it out because that will probably be easier. There it is. Right, you can see, let me just zoom into this area. You can see, hey, look, we've had the EMA's crossover. And if you're trying to figure out, okay, where do I actually, how do I know if I'm going with the trend? Well, you can add one more indicator on this, which is another EMA called a 200 exponential moving average. Why? Because usually the rule of thumb of a 200 exponential moving average is if price is below it, you're looking for sells. If price is above it, you're looking for buys. Okay, so we can clearly see that price is below a 200 exponential moving average. So what we can do from that is say, hey, we've got a crossover. We're bearish on the higher time frame. we've got the 50 that crossed over the 20 moving average, right? We've got crossovers, that's bearish. I kind of want to see some sort of structure break in this, which is what we got here, right? So now we could say, hey, yeah, we're definitely to the downside. Let's say you waited for this candle to close before you entered it in, right? So you entered in here. And now you kind of need to figure out, okay, where do I want to put my stop loss? Well, you could put your stop loss with the structure high, swing high, because technically, if you look at this on a daily time frame, or look at a lower time frame, all it is lower low, lower high, lower low, lower high, lower low, lower high, lower low. So again, you're just following structure. This is the daily time frame, right? You could put it there. You could use an ATR, average to range. You could figure out how many pips is it roughly going to move, right? And you go, well, how do I get out the trade? Well, for me, I just do a 1 to 2 fixed, because I know if I win 10, lose 10, I'm going to be out. So there you go. There's your 1 to 2, slightly less, right? There's your 1 to 2. But if you guys were like, oh, I want to get more than a 1 to 2, well, you can, but maybe you need an exit strategy. Okay, so maybe you want to say, I'm not going to exit this until maybe price closes above the 50. In this case, the 50 exponential moving average is the blue line, right? So again, depending on how long you want to wait, depending how you want to play it out. Again, this is something you're going to have to discover for yourself on the charts. This video is purely just to make sure that you don't need to go down the rabbit hole of figuring out how everything moves, why it moves, and all that stuff to place trades, because really trading is simple. It doesn't need to be that complicated. So if you had a simple rule of exiting saying, hey, I want to get out when price closes above the 50, well, then you would go out here, right? Which is basically a 1 to 2 anyway, would have taken you a lot longer to get there. So rather than it taking a few days for it to hit your TP for 1 to 2, it would have taken you a few weeks to get 1 to 2. Again, this is the daily time frame. You can try this on the 4 hour, you can try this on a 1 hour. What I encourage you guys to do after watching this video is go on the charts, add these indicators on, and just see how you get on. I feel like a lot of you will benefit from this video by making things a lot more simpler. You do not need to, again, look at high time frame analysis, structure, imbalance, impulse zones, fucking order blocks, and time and price and liquidity and all these things, and accumulation and distribution and liquidation and all that stuff. Like, you could, yeah, you can. Again, that is a strategy. It's super complicated strategy. It's not going to be easy. And I know a couple of you guys here are going to be ICT fans, and that's fine. Like, I respect the craft that he's put in, and a lot of people have put in over the time, but I still think it's such an overcomplicated way of thinking about the markets, when really all you need to do is identify the direction, which you clearly can here with the EMAs, and then look for a way to get in and out of the trade that you can consistently do, right? You do not need to go for 1 to 10s. You do not need to go for 1 to 100s. You do not need to make sexy Instagram posts. You can even do a 1 to 1. But if you know that your win rate is high enough and it's simple enough that you can repeat on a consistent basis, and it fits around your lifestyle, because it's all right going, oh, I want to trade like SMC and ICT and I want to get 1 to 10s, right? Great, but if you have a 9 to 5 job, how the hell are you going to do that? How are you going to wait for an accumulation distribution, wait for that perfect retracement into imbalance whilst you have someone looking over your shoulder and you have a normal job? And that's if you have a job where you're lucky enough to be on the computer all day. What happens if you've got a manual job? What happens if you've got a driving job? You just can't trade that way. So don't even attempt to go into that rabbit hole. So what I'm saying is, this is a very simple way for people who actually have like normal jobs where they do have a boss looking over their shoulder, or they are driving, or they are doing some manual labor, or they are like working in construction. You do not have that luxury to trade that way. So how else are you going to trade that you can consistently do it on a daily basis? Well, one, trading a daily time frame is for it. And two, when you look at the charts, you need to immediately know the direction. When I look at this chart, I immediately know the direction. It is to the downside. Reason being, price is under the 200 EMA. We have the nice crossover. It's opening up. It's widening up. Like, I don't see it needs to be any more complicated than that. And then when you understand structure, you can understand, lower, low, low, high, low, 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 high, low, 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 high, right? Enter the trade. I don't see why trading has to be complicated. It doesn't need to be. And I don't see why trading now you have to make 10% in a day for you to be classed as a good trader. It makes no sense, right? Especially now prop firms have 0 time limits. Okay, so when you see price moving to the downside and these EMAs opening up, right, it's good stuff. And this is another way EMAs can save you. Okay, so let's say you saw this crossover and you're like, oh, I'm going to buy now. Well, you're not going to buy because price is under the 200 EMA. You see what I mean? So by having simple rules in place, you're not going to make silly mistakes. Your emotions are going to make you make silly mistakes. That's a given. But again, when you have like, let's say, a 1 to 2 reward to a strategy, win 10, lose 10, make 10%. That's fantastic. Yes, you lose half your trades. But again, with trading, you do not need to be perfect. You do not need to get that perfect sniper entry. You do not need to make that beautiful Instagram post that says, look at me, I did a 1 to 100. Because again, it's something, it's just marketing. And I feel like it's really damaging for newer traders as well to come into the market and thinking that's a normal, achievable thing to do on a consistent basis when it really isn't. Like if you make 3% in a month, like if you see my other video, again, I'll link that above or put it down below. 2 to 3% a month can change your life. You know, you make 3% on a 200k account, that's $6,000. You keep 4,800 of it. Then you can buy 4 more 200k challenges. And now there's no time limits. It should be a lot easier for you guys to do. Like, I don't see why this is super complicated. It shouldn't be. But I know this kind of went down rant street, but hopefully you can kind of see what I'm trying to say here with simple exponential moving averages put onto the chart to give you a clear direction of where price is going. And then you're coming up with a plan, a strategy to jump in your dinghy and ride the wave down. This is basically it. Yes, you can ride all of it. Oh, I want to capture all the move. I want to capture all the move. But again, a 1 to 2 is perfectly fine. So guys, I hope that wasn't really a rant. It was more of a just like, keep it simple. It doesn't need to be complicated. Again, if you found this video helpful and informative, then let me know in the comment box down below. But yeah, guys, try it out. Let me know what you think.